Hi friends, this is Kishore. Welcome back to my channel. Today I am going to talk about, will banking crisis crash commercial real estate? Will there be any domino effect of banking crisis? If yes, then what is the first weakest link that will break? What are the trigger points for banking crisis? What history says about banking crisis? Hope you like this video. This is not a financial advice. Let's jump into the show. Recently, we saw Silicon Valley Bank, Signature Bank, and today First Republic Bank went to bankruptcy. They failed. Why banks failed? Like why they went out of the business? How bank? First, we know like we see like how bank works. Banks borrow short-term loans and lend long-term loans. So banks make money on the difference between a short-term and long-term interest rate. For example, a bank takes a short-term loan of an interest rate of 2% and they lend a long-term loan of 4%. The difference between 2 and 4 is the profit that bank makes. This works fine until last year when Fed start raising interest rates sharply from 0 to 4.5%. The short-term interest rate went up and long-term interest rates are went down. So this is the like 10 and 2 year yield curve inversion chart. It says it went below zero. It's like 0.54, which means banks when they lend a loan for 10 year and they took the loan of short-term loan of 2 year, they are making loss. Similarly, bank when making loss on 10 year and 3 month. This is also like right now minus 1.65. In the history, whenever it went below zero, there is either there is a recession or some crisis happen. And bank lends loans to the real estate, for example. In the real estate, again, we have a different types. Like one is commercial and another is residential. Today we talk about commercial. And in commercial, we have four different property types: retail, office, industrial, and hospitality. Commercial loans mostly they'll give in terms of 2 years or 3 year, 5, 7, and 10. In general, they'll give for 10, but there are some loans where you can give for 2, 3, 5, 7. And this chart talks about different bank types, how much they expose to the commercial real estate. In the like large banks, regional banks, community banks, and small banks. If you see here, regional banks and community banks, they expose it 18% and nearly 25% to the commercial real estate, which means if something goes wrong with the commercial real estate, then regional banks and community banks are in trouble. That is what right now happening. Both Signature Bank and FRC they come under the regional banks. This chart talks about what is the percentage share of banks exposed to the commercial real estate. In the regional banks, if you see 25 to 50% of bank exposed to the commercial real estate is 32%. Means if something goes wrong with the commercial real estate, this regional banks, whichever is exposed like 25 to 50%, there will be in trouble. Similarly, community banks, 25 to 50% of community banks share of those few community banks are exposed to 43% of commercial real estate. So that's where like if there is any issue or any trouble or any crisis in the commercial real estate, there will be hit regional and community banks compared to the large banks. So this chart talks about is there any issue with the commercial real estate? Again, we know like commercial real estate is divided into four property types: one retail, office, hospitality, and industrial. This chart only talks about the top one talks about office and the below one is the retail. The vacancy rate of office is going parabolic up in the but retail base right now it is flat, but right now we are seeing few retails are going out of business. For example, Bed Bath Beyond, we do not know how it will impact the retail vacancy rate. So these two charts is very crucial to see how in future commercial real estate is going to be. So this chart talks about are there any loan delinquencies right now in the commercial real estate and the residential? Both right now it's not there is no spike. Both are going down. It is good. There is no issue we can see where we can feel bad. But if you see in early 90s, the commercial real estate is coming from all the way from 12.5 to below. We'll talk about this one later. And in the delinquency rate, though it is going down, by each property type how they are doing. If you see office and retail, they're going up. The delinquency rate is going up, which is not good. We are going to observe this one in the coming months and see what is going to happen in the delinquency side on this retail and office property types. This chart talks about these two charts are very, very important. The first one is maturity of bonds of different property types in the commercial real estate. The below one talks about different types of bonds maturity in 2023 and 2024. In both property type and also the different types of bonds, huge amount of bonds are going to be matured in 2023 and 2024. As we see right now, commercial real estate is in problem or in crisis. How they are going to be mature, I mean, handle these losses? Like if there is any loss, how the banks is going to take this loss, how they are going to observe. If they are going to handle this loss properly, then it's be fine. If not, whatever we see like FRC and signature, it will be repeated. So to know, like, we analyzed a few charts now. Just want to make sure we are reading the data correctly or we are looking to the right charts. I recently saw that Morgan Stanley and Wells Fargo first quarter results, both are not good. Both they mentioned there is an issue, there are losses incurred in the commercial real estate, which means whatever the data we saw or we understand is correct. Commercial real estate is an issue right now. And final, my conclusion is, as Fed interest rates are going high and the spreads between 10 and 2 year and 10 and 3 months are going high, and the failures are bank failures are continuing, and huge volume of commercial mortgage bonds maturity ending 2023-24, office and retail vacancies that are increasing, regional banks are in highly exposed to the commercial real estate. All this point to the same thing: commercial real estate is in crisis. And based on history, whenever there is a big bank failures happen, that happens at the tip of the real estate bull run. And once it happens, bank starts tightening the lending standards, which cause credit crunch, and that triggers a real estate downturn or maybe a crash. That crash or downturn we'll analyze in later videos. And there is a saying from the David Clayton Thomas: "What goes up must come down. Spending will got to go down." So this is all for today's video. Hope you like this video. If you like this video, please hit the like button, and thank you for watching. And please share the video with your friends. Thank you so much. Bye bye.